The importance of provisions. Number one, funds for replacement of assets. As fixed assets have limited useful life, they have to be replaced by new assets when they become obsolete. For this purpose, provision for depreciation is to be made. When provision for depreciation is made, the amount of depreciation charged to profit and loss account is retained in the business and can be used for replacement of the assets in future years. So every asset has a useful life, and after the completion of the useful life of the asset has to be replaced. In this concern, whatever depreciation is charged on the asset in the profit and loss account, that amount is to be retained back by the business organization, and in such a way the accumulated amount will be used for replacing the asset after its useful life. Number two, funds for diminution in the value of assets. In case of diminution in the value of assets like investments, adequate provision in respect of provisions for fluctuation in investments is to be made. For this purpose, investment fluctuation fund is to be made. Any loss due to decrease in value of investment is to be first made. Any loss due to decrease in value of investments is to be first met through this provision, which has been specifically kept for the purpose of diminution in the value of investments. So when the value of an asset, especially the investments, declines, in that case a fund is to be created. That fund is called as the investment fluctuation fund. A amount is kept in the fund whenever the value of the investments decrease. Then to compensate the loss on the decrease of the value of the investment, some amount is transferred from the investment fluctuation fund so that there is no harm on the profitability of the business organization. Then uniform charge on income statements. Provisions has to be created for equal distribution of expenses and losses in all the years so that proper analysis for deviation in income for any year can be examined. Suppose the useful life of a machine is estimated as 5 years. So uniform charge on income statement. The provisions helps in providing a uniform charge on the income statement. If a particular income or a particular expense is being provided for a particular year, that is to be written off in different years in equal installments so that there is a uniformity maintained in preparation of the income statement on account of that particular expense and loss. Then in compliance of principle of prudence, as per the convention of conservatism or prudence, provisions must be made for all expected losses so that the business enterprise can be saved from the burden of heavy losses in future. Keeping this in view, provisions are to be created in which an adequate amount from the profit and loss account is to be set aside. In other words, we can say that the adequate amount of provision for all expected losses has been made so that the balance sheet will show a true financial position of the business. As per the principle of conservatism, which says to play safe, for all the expected losses that are going to happen in the future, certain provisions are to be created so that the financial position of the business organization can be maintained and everything can be fully disclosed, that this is the particular loss that is going to arise in the future, but the actual amount of the loss is cannot be ascertained. So a fictitious amount, an imaginary amount will be provided for that particular as a safeguard from that particular loss which is going to arise in the future. Then types of provisions. Depending upon the need, size and nature of the operations of the business, different types of provisions are maintained by the business enterprises. Usually a business enterprise creates provision for legal damages, provision for depreciation, provision for taxation, provision for doubtful debts, and provision for discount on debtors. Now the first one is provision for discount on debtors. To motivate and inspire for making immediate payment, usually a scheme for discount is offered to the good debtors, that is, receiving less than what is due from them. Such discount, being an expense, is debited to profit and loss account. At the end of the financial year, business enterprise, based on its experience, anticipates the amount of debtors who may avail themselves of such discount. For this purpose, a provision for discount on debtors account is created, in which the anticipated amount of loss on account of discount on debtors is to be set aside. So the business organizations to motivate their debtors to pay on time offers some discount. This discount is a loss on the revenue of the business organization, because say you have to get an amount of rupees 10,000 from a person to whom you have sold goods on credit. Now you want that the person may give the money in the current till the end of the current financial year. So you will offer a discount that I will all those who are the debtors, they will be given 10% discount or 5% discount. So, and this offering of the discount will encourage the debtors to pay the money soon, and you will get the revenue. And in this way, the provision for discount on debtors is created, and this provision is debited to the profit and loss account. By providing for the discount on debtors, the true and fair position of true and fair financial position of the business organization can be estimated on a particular date. Then provision for doubtful debts. Generally, there are debts which cannot be recovered from the debtors due to various reasons, such as death, insolvency, or non-traceability of some debtors, etc. The debtors from whom amount cannot be recovered are treated in the books of accounts as bad and termed as bad debts. However, at the end of the financial year, there may be certain debts which are not bad as yet, but they are likely to be bad. Reasons being malafide or bad intention of debtors. Sometimes due to non-availability of debtors, too old debts become time barred. Hence, amount from such debtors is not likely to be recovered. Keeping in view the convention of conservatism, adequate amount from current year's profit is set aside in a provision for doubtful debt account.